everyone. What a crazy week it has been. The South Koreans and the semiconductor markets were in shambles for a little bit there, and there have been a lot of losses across the board, especially for Koreans and Asians on significant leverage, though of course some of us have been on some significant leverage as well. In this case, however, it was predominantly Asian focused, and I really like this tweet. Some of the stories have been just unbelievable to read, and the losses in many cases seem extraordinary. It does appear as though everyone, for the most part at least, needs to learn the hard way how risk management works and that things don't work the same way forever. Nonetheless, some of these are absurd, and obviously one of the largest stories revolves around the Situational Awareness fund, which is still up significantly year to date, though it suffered severe drawdowns and the public holdings were bought by Citadel.
Yeah, I mean, look, obviously you can't, not blowing up is sort of like, task number 1 and 2 or whatever.
So true. We've gotten some great insight on the situation across the board, and I think a couple aspects are pretty interesting. Given that he is still up 80% on the year, he is still managing a $10+ billion fund, and some of these old interviews are definitely worth watching because he does highlight some of these concerns and some of what did happen by articulating the fact that managing drawdowns, even when you're correct, is still very important, and I imagine he still will be correct about his AI-related opinions and the track that we are on, as while this has been a substantial drawdown, I would be very surprised if this was the end of the AI trade, even if we do happen to go lower in the meantime. Either way, I don't think it has a groundbreaking impact on the decade-long trajectory we seem to be on. In all fairness, on such leverage and with such an intense move against him, he didn't fully blow up, and a 67% drawdown is absurd, but it does seem somewhat par for the course given the leverage he is aiming to achieve. And if I have any gut feeling on this, he'll still do quite well, and his thesis will perform as expected in the years to come, even if he's seeing some bad publicity right now. And I also think that some of the commentary on this situation does boil down to this. He's still doing better than the vast majority of investors and traders right now, and he didn't blow up and get zeroed out. He's pretty young. He amassed an incredible amount of assets under management in a very small amount of time, and his returns since inception are still unbelievable, even including the most recent drawdown. So I think that part of the takeaway can be that assessing drawdown potential is very important. I think another part can be that if your ideas are very strong and you want to position for them with leverage, drawdowns are going to be a part of that experience. And for those who can handle the volatility, in some cases, it is the path to exceedingly strong returns. And I don't think it's something to discuss too negatively, given that in part, we'd all like to learn enough about the game to have such rallies ourselves. So we shouldn't be looking at this as if it is some indication that we are right to position without leverage or without intense conviction. Sometimes the market simply moves against you, as it did with him, and that is part of the game. These are remarkable times to be trading in. I continue to be an AI optimist, and I don't think there is too much more to say on this topic. Thank you for watching. Consider subscribing. See you next time.